Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Now, if you follow along each and every week, you'll know that I leave my lines on the chart from the previous week so you can see how the forecast worked out. And last week, what I did is I carried this target line down to that level right there, and you can see that when I highlight this box, you'll see what my target price was from last week, and that was $343.17. And we hit that on Monday. We bounced just a little bit, came right back to it on Thursday, and lo and behold, we closed below this key support level here on higher volume. You see that as I magnify that, you see the higher volume. Now, I'm going to erase these lines now because now that we've hit the target, I'm going to set new target lines. And when you have a red candle like that on higher volume, that tells us that the sellers are becoming more motivated. Now, the oscillators down here, the stochastics and the CCI, you see this slight hinge on the CCI, but I do believe that we're going to go lower on Tuesday. Remember that we have a shortened trading week, so Monday the market to close for George Washington's birthday. Therefore, Tuesday and Wednesday, I think we're going to go lower. Whether or not we bounce, we'll have to see, but I'm being more conservative with that downside target down to 337.71. So we'll have to see what happens. If the volume drops on Tuesday or Wednesday as we're going lower, we might see a little bit of a bounce back up to this moving average, but right now all the pressure is on the sell side, and I'm going to talk a little bit more about that when we look at the breadth of the market. So that's the diamonds. If I look at the Qs, it's a ticker symbol QQQ. It's more or less the tech sector. Again, you can see my lines were set in place. We hit that on Monday, came back up to the moving average on Tuesday and Wednesday, and then took another nosedive. Now here too, I'm going to leave this target down here, this target support level in place. I'm just going to extend my line to that support level. I do believe that we are going to touch that next week. Again, the selling pressure is still in place, higher volume right there. I'll erase these lines now that the targets have been hit, but I will leave this upside resistance in place right here. We have resistance at the moving average, but this too will act as a resistance area if we even get up to that level. Now, here's the key point to look out for. If we break out below that support level of 334.81, which is my target right here, actually 334.97, the support level is a little bit lower, but if we hit that target, break out below support, then this market can run, because look what's happening on the weekly chart. This is a key support level, and we see that the next support level is going to be down here from the lows on May 10th, which would be right there at around 310. So you got to watch out for that. If we break this support level, then the next support level is 310. And if you're long the market, I've been talking about this for a long time, but if you're long the market and you're a buy and hold investor, you have to be really careful, because this market is getting treacherous for those who are long the market. So again, that's the Qs. Now, if I go to the S&P, SPY, something very interesting happened this week. Not only did we hit my target precisely, in fact, we almost closed exactly on my target. Again, my target box right there was 432.57. We closed today hitting that target again on higher volume. I think we're going to go and test these lows down here. And so Tuesday, Wednesday, the selling pressure will still be on. Downside price target right there for SPY is 428.03. Now here's what I want to point out to you. If I switch my chart to a moving average, I track the 20, 50, 100, and 200. Look what's happening here. We have a cross of the 200 right there. The 50 yesterday crossed below the 200. Now, I mentioned this last week, but it's important to pay very close attention to what happens here. When the 20 crossed below the 50, we had selling coming into the market. Then the 20 crossed the 100, and what happened? We had selling coming into the market. Now the 20 is crossing below the 200. We're seeing selling coming into the market, but I think that's going to be prolonged selling, because if the 20 stays down below the 200, guess what's going to happen next? The 50 will cross the 100. And what this does is it starts to kick in the sell programs that are used as algorithms to manage risk in the market. A lot of funds will start selling based on these moving averages crossing. So you have to really keep an eye on that. That's SPY. Right, so now I go back to my regular charts. You'll see this is a key support level for S&P. Now, the VIX, which for the most part is inversely related to S&P, remember what I said last week? I said I wouldn't, and I even drew these blue crayon lines here on the chart. I said I would not be surprised if the VIX pulls back to this trend line and then bounces. That's exactly what's happened. Now, I'm not moving this at all. This is a longer term target that goes out to March 24th. Again, look at my data boxes that pops up. See that? March 24th, I'm putting a forecast of 41.88 on the VIX. Now, if we go up to that level, it may happen before then, but the bullish VIX is very bearish for the market. Keep that in mind. And every investor and trader should have this on their watch list. It's looking very bullish right now. I do believe we're going to get up over these highs from back here, which were back on January 24th. I think we're going to surpass that. We see higher lows popping up on the VIX here, but we also see higher highs coming in. See this long shadow candle? We had a higher high there, and I think that the next move for the VIX is again going to be a higher high. So keep that in mind. Be very, very careful. I've been talking about risk management for a long time now, since May of last year. And so that is the VIX. Now, finally, IWM. This is the only one that has not yet hit my downside target. I'm keeping that in place. I'm not moving that. I'm not even going to move that zip line over to the right. I'm just going to keep that in place, and I have this horizontal line right here of 188.90. That's where I believe the IWM is going to wind up. And if you look right here on the weekly chart, you'll see that that is a key support level right here. Should that break, we have a gap all the way down here. Now, finally, I'd like to talk a little bit about the 52-week high, 52-week low. We have a 7-to-1 ratio on the New York Stock Exchange here. We have 23 highs, 52-week highs, but look at this. We have 178 new 52-week lows. That's for the New York Stock Exchange. Now, if you look at the Nasdaq, look at this. We have 31 new 52-week highs, but look at that. 463 new 52-week lows. That's 15-to-1 to the downside. So the breadth of the market, looking at the 52-week high, 52-week low list, still looking very bearish. Be careful. Keep your stops in place. I'll put the link to that particular website in the description box so that you can keep track of it on your own. I generally check that 3 times a day, 10 o'clock, around 12:30 to 1 o'clock, and then I check it again at 3 o'clock. Right, so it's something just to keep an eye on, to look at, to see if we're going to get a continuation of the selling, and we are seeing that throughout the entire week. So my last request to you is this: please subscribe, like, add comments. I love when you put your comments out there, and also share. When you share, you're helping get the word out about technical analysis, and you're doing everyone a favor by doing that. We do rely on people sharing this to social media pages, gets the word out. People see the accuracy of the charts, and then they continue to follow and make money, and above all, hopefully those folks are also managing risk in these very interesting times in the market. So enjoy the rest of this long weekend. Hopefully you're spending that time with your family and your friends, and we will talk to you next week. So long.